Good evening again. Today, I would like to discuss about bank reconciliation statement. Bank reconciliation statement. Now, this video is all about bank reconciliation statement. The bank reconciliation statement discussion will be suitable to students of ACCA UK, CIMA UK, then CA of any country, AAT Sri Lanka, A-level students of schools. For these students will be useful for this video discussion. Now, prior to I discuss about bank reconciliation statement, I would like to put forward certain concepts regarding what is banking and its related recording. Banking and recording. Now, if you assume that we represent a company, let's say I represent company X Private Limited. Now, in company X Private Limited, I will have my own cash book. The cash book I will have, usually we generally say that the bank book. Generally say that bank book. Now, here what is important to note that the bank book means we record transactions between the company and the bank. These transactions we will record in the bank book, and we also record transactions carried out by the bank on behalf of our business. Now, in these two situations, we will record transactions in the bank book or bank account. Sometimes we call it bank account. Now, you can clearly see that this record belongs to our own company. Our own bookkeeper, our own accountant, our own assistant accountant will record any transaction here. As you know that this is the debit side and this is the credit side. Now, we will have a debit side transaction where any deposits or any transaction which will increase the favorable balance in the bank, we will record it here. We will record here all deposits type transactions. And if we make any payments or any withdrawals from the bank, we will record it here. Now, you can clearly understand that. Now, this is the this area is the debit and this area is the credit. So these transactions are conducted and recorded by our own staff, internal record. That got to be clear. And once here one particular transaction you need to understand sometime, we will withdraw money or cash from the bank. and bring to the business. Bring to the business. This is one example. Second example, we will deposit. We will deposit money to the bank from the business. This we will record it here. So if we deposit, we will write the narration here, cash. And if we withdraw, we will again write the narration here, cash. This type of transactions are known as contra. This type of transactions are known as the record, and the record keeping happens at the same book. However, these are some situations which is common in our own book. This is part of our double entry. Now, on the other hand, the bank will issue a statement known as bank statement. Generally, a bank statement looks like this. This will have 3 columns, actually 4 columns. Description column, withdrawal column, and deposit column, balance column. So whenever we deposit any transaction, any record, we deposit in our cash book, once that deposit has reflected in the bank point of view, the banker's point of view, they will record that here. All the deposits, what has been realized in the bank, they will record it here. While any withdrawals, those withdrawals will be recorded in this column. Now what is most important is that end of these transactions, the bank will have the balance of the available funds for the business in the bank statement, whereas this cash book or bank book also will arrive the balance as per the bank book or cash book for the balance that should be available within the bank. Fine. Now this is the normal situation. Now the problem that we face is that question is, on a particular date, let's say a transaction date on or balance date on 31st December 2019, I am checking the bank book balance. I am checking the bank book balance. Let's say I have a balance of $10,000. And ideally the expectation is, if I check the bank statement, I would theoretically, I must have $10,000. But on a practical sense, this will not be 10,000. This will be some other figure. It can be either 15,000 or it can be even 5,000. In other words, a balance much different to the balance in the cash book or bank book. Because of this situation, now whenever we prepare financial statement, before we prepare the financial, we have to carry out a reconciliation exercise in order to find out the differences or the reasons for such differences. We have to find out an exercise. An exercise should be carried out. An exercise should be carried out to evaluate the reason for the difference between bank book, internal, and bank statement, external. This exercise is known as bank reconciliation statement. Now we have to find out the reasons for the differences. Now let's try to find out the reasons for differences. Reasons for difference. First reason, solely due to the issue with internal record keeping. Solely due to the internal record keeping issues. Second one, solely due to issues with bank. So a difference between the bank's book balance and the difference between the bank statement balance can be due to issues related to internal record keeping or related to the bank point of view. The bank may have done certain mistakes or certain omissions related to this. Now let us try to understand one by one in detail. Now first one, internal issues. One reason can be, now when we have a bank transaction, we may have requested the bank to transfer certain transaction on a regular basis which will not come to our attention immediately. This is known as standing order. We have requested the bank to transfer insurance premium every month, whereas the bookkeeper will not remember this on a very particular date to record the transaction. He will only get to know once the bank statement is reached to the business. Second, any bank charges which the bank has imposed, to us, we will not get to know until we receive the bank statement. So this is another point which the bookkeeper or our internal staff avoiding the recording in our cash book or bank book. Third, sometimes customers may deposit funds which are related to us, due to us, throughout the island in different bank branches or ATM, which we will not get to know until we receive the bank statement. So this is known as direct deposits or remittance. Sometimes, the bookkeepers or any other staff who do these record keeping transactions are human beings, and the human beings are prone to make mistakes. So there can be mistakes which, because of that, we may have errors in our bank. So errors in the bank book. So these are some examples of reasons why we have difference between bank book and bank statement. These are under internal issues. Here you need to remember one thing. Now, usually a bank statement are delivered on a monthly basis when there is no online transaction, a manual or what you call manual process. On a monthly basis, bank is printing a bank statement and posting. Now, but currently, what is happening really, the business has already online transactions, so even you can take the bank statements balances even on hourly basis. So therefore, the requirement of bank reconciliations may not necessarily useful on current days, and even then, it is important to understand and evaluate the reasons in order to avoid any fraud. So now, second reason, bank issues. The first one, sometime company will issue checks and these checks will be given to the suppliers. The suppliers will not take these checks to the bank immediately. They will retain these checks within them. So these are known as unpresented checks. Also, sometimes the customers or our bank, our staff may deposit checks on the very last day of the month. For example, 31st of March or 30th April or 31st of October. On any given month end, we may deposit some collections of the checks or even including cash. But the bank may take their own time to process. So when they issue the bank statement, the process may have not finished. Accordingly, such deposits will not appear in the bank statement. This is known as unrealized deposits. Thirdly, as I said before, in bank also human beings are there. So therefore they also prone to make mistakes. And then there are the possibility that you may have errors. So therefore, due to these two main reasons, we have to prepare a bank reconciliation statement in order to understand the reasons for the difference. Now we need to understand the process. Process of bank reconciliation statement. Process of bank reconciliation statement. Here, there are various processes. The process I am adapting is that first we need to prepare an adjusted cash book. Once you complete the preparation of adjusted cash book, then we should prepare what we call a bank reconciliation statement. Now, what I mean by adjusted cash book. Now, let's try to understand little more detail as to what you mean by adjusted cash book. In short, I call this ACB. So, ACB means you start with the closing balance of the bank account in the ledger and incorporate all the necessary transactions related to the bookkeeper along with a double entry. After completing that, you will have a closing balance known as adjusted cash book balance. So it is a T account. So I name this ACB and I may have my opening balance. Remember, opening balance can be a debit balance or opening balance can be a credit balance. It is not both, it is either. So it can be either a favorable balance or a credit balance, debit balance. Or I mean overdraft balance, unfavorable balance. So once we start with that, we may then incorporate standing order, Standing order is a payment, so I will credit in the cash book. Bank charges, again it is a payment nature, so I will credit the cash book. And sometime you may also have bank interest. Bank interest, I may credit this, and I will incorporate direct deposit, I will debit this, or sometime we call it direct remittance. So either direct deposit or direct remittance. So you will have this. So finally, we may also need to incorporate errors. Errors can be an effect on the credit side, or errors can be an effect on the debit side. Remember again, it is not both. It is either. But if we have more than one error, one is a debit effect and the credit effect, you have to have both. So just remember that. So it can be either a debit or a credit. Now once we balance this, we then will have a closing balance. For the sake of convenience, I would assume it's a favorable balance. So I will write here balance carried forward. Remember that will brought down here. Balance brought forward. So this is a typical scenario or an example what you need to do with adjusted cash book. After completing this, then you have to work on what we call just a bank reconciliation statement. So bank reconciliation statement. A bank reconciliation statement we will start with balance as per ACB. That balance I will pick this one. I will pick this one. The balance as per ACB, then plus unpresented checks. Here you need to remember, in a common law in any country, most of the countries, that if any check is issued and that check is not presented for the next 6 months, the next day the check will get nullified or get cancelled. So when you're doing a bank reconciliation statement, from a practical point of view, you have to check the date of the issue, and then you see from between the issue date and today, is that gap as exceeded by 6 months or not. If it is not exceeded by 6 months, no problem. But if it is exceeded by 6 months, then you need to cancel such checks. However, you have to take unpresented checks here. So this can be one or it can be several. So you will take those unpresented checks and you take that answer here. Now here this can be a plus or a minus. Y plus, favorable balance. Y minus, overdraft balance. Then you may also have bank error. You may also have bank error. So you take that total as well. So then we take this total and we subtract unrealized deposit. As I said, business has gone and deposited the money in the bank, but the bank has not recognized in the system. The balance has not reflected such deposit. So these are unrealized deposit. It can be either one or it can be more than one. So you have to take those totals here. So we take that, and this bank error can be an addition error or a subtraction error. So therefore, we have to subtract the, if any, bank error with an effect of deduction. So we take that as well. Now, the answer I get from this total and the total of this is either a plus balance or a minus balance, is known as balance as per bank statement. This can be a favorable balance or an adverse balance. Now, exam question style. Exam question style. There are various different styles. First one, question will provide a paragraph. Using this, we need to prepare a bank rec. Second, question may also give you bank book and bank statement extract. Bank book and bank statement extract. Students should use this in arriving a bank rec. With this, I will conclude the theory discussion of bank reconciliation statement. I have not deliberately discussed any question in this video, so I will upload this and I will be giving you some examples on a separate video. In the meantime, if anyone wanted more details about bank reconciliation statement or any accounting discussion, please do contact me on this number. Or subscribe my YouTube channel and write comment over there, then I would be able to help you out. Or even you can contact me through my mail ID. Please subscribe to my YouTube channel, share my YouTube channel, like my YouTube channel, and write your comments. Thank you very much.